Look, here's the thing. If we're going to trade this week, we need to know what happened last week. And what did we have last week? Crazy volatility all over the place. The market is thrashing around. 1 minute it's up, the next minute it's down. And really what you have is buyers and sellers throwing financial tantrums in the market. Okay. And this tug of war isn't going to stop this week. Okay. We don't have a trend. The trend is gone. And when a stock, when an indice, an ETF, when they give up their trend, guys, you have no direction. Okay. You don't really have a direction. Buyers and sellers don't know where to go, which direction to go. It's kind of like if you're flying a fancy kite. Okay. It's held by 3 or 4 strings, and then one of the strings breaks. The smooth motion basically is gone. Okay. The kite basically, loses control and it goes all over the place. Okay. Wind is blowing it around all over the place. If you look at the market, it's the same situation. You had a great strong uptrend, a nice strong uptrend channel in the spiders, but then it broke. The lower the lower channel, the lower trend of the channel basically broke. It broke out of the trend. Okay. And now what we have is a market that's thrashing around out of trend. But listen, there's something very important. You guys need to know this, if anything. Okay. February 24th was a very important day in the market. Okay. That's since we lost the trend. Okay. We lost the trend, but on February 24th, that was when the market basically hit a low outside of the trend. Okay. Now, not like a yearly low or anything like that. See, when we look at the market, we can't just look blindly from year to year lows or year to year highs. And a lot of new people trading tend to look at cycles by year to year. I hear a lot of people saying stuff like we should buy this stock because it's pretty much at the lows right here. Okay. It can go high from here. It's at the lows. You got to be careful with that type of logic, guys. You see, stocks and the market in general, it moves in cycles, not just yearly cycles, but cycles in general. Okay. There could be a few phases within that year, or it could take, more than 1 year for these phases to form, depending on the time frame that you're looking at. But simply looking at the yearly highs or the yearly lows or 6-month lows or anything like that, you're missing crucial information about the market. You're missing the most important part of recognizing which direction the market is moving. In the market, you basically have 4 phases. You have 4 cycles, so to speak. You have a basing phase, an advancing phase, a topping phase, and finally you get yourself a declining phase. Okay. Now, the market was in an advancing phase for a little over a year. Okay. Then it broke out of that advancing trend phase. And what we have now is a topping phase. Ever since it broke out a trend, it's been struggling to get back into the trend for months now. The spiders has been struggling immensely trying to get back into that smooth uptrend that it had. But again, something that's very important, and you should be taking notes on this, guys, is February 24th. Okay, that is the day that the market hit a low in the cycle that we are currently in, which is a topping cycle. And that's very, very crucial and it's a very crucial and an important date for those of you who are trading in these markets. That low on that day, February 24th, that low is basically where you had a line drawn in the market that said, we will not sell past this point. And ever since we hit that level, you saw a tremendous amount of noise hitting the airwaves, on the television, on the financial news networks, trying to convince people that now is the time to buy, that now is the time to get into the market. They're doing everything they can to get as much retail money as they can into this market. And they're trying to convince the public and Main Street that the market is strong. But the reality is that we're in a topping phase right now in the market. Okay. And unless we get back into a trend, then we're making these new highs, but we could definitely be in the topping phase and heading for a declining phase. Okay. Heading for some sort of a crash. Now, you don't know that this is happening, that this is going on, unless you know how to read the charts, unless you're looking at market phases, the cycles, and you're understanding the way that the market moves, which most people don't. They simply, again, just look at the 52-week lows and highs and kind of base their buying on that yearly cycle instead of the 4 cycles that really show us where the price is going in the market. Now, I'm not saying that we hit a top, okay, and that the market is going down. Don't get it twisted, okay? What I'm saying is that if we study the markets and we know the movement of the market, then we know that we are potentially in a topping stage right here. The keyword is potentially, okay? If the market gets back into trend, then this topping stage switches gears and it becomes an advancing stage once again, okay? It's kind of like a car, guys. It's like a transmission. It's constantly switching gears. We have to know what gear it's in so that we can have a good read on where the prices are going. So every day, one of the things that I do is check what's called the market breadth, okay? What I mean is I want to know how many stocks in the market are participating in the movement of the general indices, okay? Here's an example. Let's say we got the Heat playing Houston, Miami Heat playing Houston. They're up by 20 points. I want to know what players are contributing to that point lead. If every player on the court is scoring points, then I don't want to get my guys off the court. Now, if only one is scoring and the rest are cold, well, it might be a good idea to get someone else on the court, okay? Going back to the markets, if the Dow is up by 500 points, I want to know which stocks are contributing to that rally. Are they, are all of the stocks up, or is it really just only 5 or 6 stocks that are pretty much moving the rally, but the majority of the stocks are down? That's market breadth. Now, if you don't know which stocks are rallying with the market, then you could be fooled by the general market numbers, okay? You see, the rally may not be a rally at all, okay? It may be only, again, a handful of stocks that are moving and the rest aren't doing anything. So you to have a true rally, you have to have the majority of the stocks participating in that rally. You feel me? You can't just have a rally because 5 or 6 stocks are doing well, but the rest of them are falling apart. Okay. And by the way, guys, they won't talk about this on CNBC, Bloomberg, that's you never hear them mention this. Okay. But when you break major trend lines, you have no idea if the market is really rallying or not unless you look at the entire makeup of the index. So unless you're looking at the 500 stocks that make up the S&P 500, you don't really know what's moving the rally, what's moving the index. Is it a fake rally, or is this actually a true rally with the majority of the stocks, contributing to it? Now, again, we are off trend right now, guys, okay? The market is no longer in that nice, strong uptrend that it had. And there's a reason for this, okay? The market is having a very difficult time absorbing all the inflation that's being created by the Fed, by printing money, printing money like how we've been doing for years. We were able to keep the market flowing smoothly because all of the capital that was being printed was injected into the financial markets. Now you got yields rising, which is a problem for tech. And by moving the yields down, we were able to have the Qs continuously moving up. But now the yields are giving the Qs, the QQQS, a problem. Okay. You also got the banks, which are falling apart because the economy can't absorb the high interest rates. Yields and interest rates are putting so much strain on the market. If you don't know how to measure the market breadth of the market, then you can't really see if these are true rallies or just a few market caps massaging the index, making it seem like the entire market is rallying. But the reality is the majority of the stocks are falling apart, and yet the market is rallying only because a handful of stocks are moving the index. That's how you know these things, okay? By looking at these numbers. There isn't real movement behind the numbers. It's like a magic trick, Okay, you see the numbers going up, but it's an illusion because most of the companies are stalling under the surface. And this is why the Qs are really thrashing around right now. Okay, same with the S&P. The majority of the stocks right now are trading under their major moving averages, and they can't seem to break back above them. They're having a very hard time doing that. And you know where the buyers are. If you've got the stock that's trading under the 50-day moving average, under the 200-day moving average, guess who's there? Sellers. Okay, sellers. Until the stock gets above those two moving averages, the stock is being hit with sellers daily. Buyers live above the moving averages and sellers live under the moving averages. Picture this like an old school city where you had the railroad tracks separating the very nice neighborhoods from the very poor neighborhoods. Okay, they were separated by this line. Okay, now that's the same thing. The moving averages separate where the buyers and the sellers live. The buyers live north. They live on top of the moving averages. The sellers live south underneath the moving averages. Okay, very simple. If there's anything you get out of this video, let it be that. Okay, I know this sounds really simple, but it's a simple equation of supply and demand. If you have more demand, you have buyers, and the price moves with the demand above the moving average. Okay, right now the majority of the stocks are under their major moving averages. It's not enough to look at the screen and see the market rally 200 to 300 points. That's great. That's awesome. But really, we want to know what's moving it. What companies are rallying? How many are behind the move? And I'm telling you guys, things are getting worse as the market breadth gets worse. And last week was a pretty terrible week for the market. Okay, the breadth was awful in the market. And again, they don't want to talk about this. They don't want you to know this. They don't want people to know how bad the selling is in these stocks. Okay, we could have another crash. Okay, and I already mentioned that we're in a topping phase. And what happens in a topping phase is that the stock either tops out or it manages to get back into an uptrend and continue on its merry way back into an advancing phase. Okay, so back to February 24th, we got to know the low that the market hit on February 24th, because if the market breaks the lows of February 24th, that can be a catalyst that moves us from the topping phase into a declining phase. Okay, we could see a crash. And by the way, if you don't know how to short, you're either going to lose money from being on the wrong side, or you're going to lose money because you're not going to be able to participate in the declining of prices. You have to know how to short, guys. I say that to all of my regular viewers, especially those of you who have watched my live streams on Twitch. You have to know how to short, okay? You have to know how to make money when stocks go down. That's the right way to do it, okay? And that's what I want to teach you here on this channel, okay? How to make money shorting stocks so that you don't care if the market goes up or if the market goes down, because you know how to make money in both environments, okay? Most people only know how to do one thing, buy, that's it. They don't know how to short, so they miss out on the other side. So this brings us to our very first stock of the day, or rather the inverse of the day, okay? The SDS. Guys, this is a stock that I'm looking at for potential trade. The SDS is an inverse of the S&P. Very simply, this is a stock that's already short, okay? So all you do is buy it, okay? You buy it, and as the S&P falls, the SDS rises. It's an inverse stock, okay? So it's a way for people who don't know how to short to be short without actually shorting, but instead they're buying an inverse stock that is already short. So they're buying a stock that's short, okay? Try to explain it the best way that I can, guys, okay? So look, if the spiders takes out the low of the 24th, you're going to see real panic hit the market. I mean, things could get Very, very ugly. Okay. So as the spiders run into difficulty trying to move higher, you want to keep an eye on SDS. Okay. Because that's the opposite. That's what's going to inverse the movement of the spiders. If the spiders go down, the SDS mirrors that inversely and goes up. Okay. So again, this is a way to be short without actually being short. You're buying a stock that's already short. PSQ. This is another one, guys. PSQ is an inverse of the Qs. Very simple. As the market falls, again, the inverse stock will rise. The stocks that I'm mentioning to you right now, these are not recommendations to buy, sell, or hold any stocks, any securities, any ETFs, anything. Okay, this is not recommendations to buy or sell stocks. All the information here on my channel, all the stocks that I mentioned, they are for educational purposes only. That's it. I want you to learn from this information. Okay, but if you're considering buying or selling any of these things, you need to do your own due diligence, guys. You need to seek out a qualified financial professional to make sure that these stocks fit your financial situation. I do not know that. I'm not a financial professional. I'm here to help teach you guys how to learn a thing or two about these markets. But you need to do your own homework and be responsible with your money, because you can lose all of your money in these markets if you don't know what you're doing. 90 to 95% of the people who trade in these markets lose money. Okay. And I don't want that to be any of you guys who are watching. So do your own homework. Just because I mentioned a stock, that doesn't mean to buy or sell what it is that I'm recommending. It means watch it, because there's a lesson in what I'm trying to show you guys here. Okay. Learn how the market works. Okay. Take care of your money, guys. In the market, the number one goal is capital preservation. So make sure you know the risk before even you get into a stock. You should know the risk. There's two things that I teach those of you who are just, who have been watching me for a little bit. And again, guys, I'm a young channel, but the regulars who have started to rock with me, come into my Discord, watch my live streams, you know that the two things I always tell you, you need to know two things before you get into a stock. Number one, who is in control of the stock at this moment? Are the buyers in control or are the sellers in control? That's number one. Number two, what is my risk in this trade? If you don't know the answers to those questions, you should not be trading, guys. That being said, we need to watch a lot of the stocks trading this week. A lot of stocks are close to their lows, okay? And they've already taken out their lows. They've taken out the major moving averages. Check out WHR, Adobe, ADBE, GM, Pulte Homes, PHM. These stocks are setting up to take out their lows. AMAT, AMAT. This is another one. It's been breaking its lows. Okay. Now, as these stocks get going, you might get some real big, nasty drops in the market in some of these names. Another name, Ford, FDX, Federal Express. Last week, I was short FDX, and it was a good trade. It ran a good 4% since I shorted it last week. Now, as position traders, as swing traders, these movements happen every single week in the market. You just have to know where to look, okay? You have to be looking, you have to be watching these markets, watching the market breadth, watching the interest rates, the moving averages. All of these things are telling you, or rather they're showing you where the money is moving, where the money is flowing to. Now, I mentioned the banks earlier and why they're in trouble. So I want to throw two other names out there. Bank of America, BAC, and Capital One, or Citigroup, C. Okay, so you have BAC, you have COF, you have Citigroup, C. Okay, the banks right now are having some very big problems. Okay, they're having, actually, let's just say they're having difficulty. Okay, and the difficulty is in the debt that they're carrying. They are carrying massive debt. Private debt, corporate debt, consumer debt. We've never had debt levels like these. In 2008, they started QE and they dropped rates down to rally the market. all of that printing, all of that inflation is finally catching up with the market. This was designed to, again, benefit the asset class, okay? The wealthy, those who own all of the assets, okay? They benefit from this inflation. The value of their assets rises significantly when you have inflation. The value of boats, mansions, yachts, real estate, stocks, when it rises, when inflation rises, so does their net worth. So inflation makes the rich richer on paper, okay? Now, there's another thing that inflation does. Inflation is actually a position where it's actually in a position now where the government is inflating its way out of debt, okay? What I mean is this. When they print all of this money, the dollar becomes less valuable. And when we pay China back for all of the loans that they've given to the government, they're getting paid with dollars that are less valuable than they used to be, okay? They have lost a percentage of their buying power. This is another thing that inflation accomplishes, okay? Now, most people don't know any of this stuff is going on. They don't know this because most people are just happy with their cheap payments on their debt, okay? But where we are right now with the price of gas, the price of food, all this stuff that's going on, all of these prices that are rising is because of the printing that, again, has been going on since 2008. Okay. Inflation models all calculated that at some point we would arrive here. But the wealthy have been the ones, again, who have benefited from all of this. The net worth of the richest individuals has skyrocketed, and inflation has made them wealthier than ever, again, on paper. Now, the reason I'm mentioning this is because those actions in 2008 are just now starting to have an effect on the market, okay? But that's 14 years of printing, okay? What effect does all of this have on the economy? And why is the market, why did the market have a mini crash in the beginning of the year? Can all of this lead to the market crashing even further? Okay, I don't know. Okay, I don't want to be another channel calling gloom and doom. There's plenty of those channels, but I do want to be a channel that helps you find the opportunities, that helps you learn to navigate in these financial waters. And instead of running around with fear, instead of that, we're learning how to spot the opportunities. We're learning how to short stocks, how to be on the winning side of the trade and benefit from all of this stuff financially, okay? I want you to put gold, okay, on your watch list. That's the other one, GOLD, gold. Also, NEM or NEM, okay, NEM, okay? Keep a close watch on these stocks, okay? These are mining stocks, gold stocks, oil. People are going to be running into these stocks as you see the Qs and the spiders break lower. Okay, if the Qs and the spiders continue to fall to the downside, you're going to see those go to the upside. Okay, and really, I mean, that's pretty much it, guys. As these stocks starts tanking, the money is going to start seeking shelter. Where can it hide? Where can it go? And it's going to go where it always does, and that's in gold and in oil. Okay, in commodities, those, the assets, the commodities that benefit from inflation. Panic always does this, okay? I want to shift a little bit and talk about geopolitics, okay? Because this is also what we need to know what's going on. China has been locking down again, guys, okay? They're locking down, and that means that the demand for oil isn't as strong as what it was, okay? That's why you've been seeing pullbacks in oil. But don't be fooled, okay? Oil is not going anywhere but higher, in my opinion. Gold and oil are being bought up, okay? Yes, you got a little drop. Yes, you have pullbacks. But have you guys seen these yields? When yields rise, oil rises, okay? Just because China right now isn't demanding oil because their factories are closed doesn't mean that oil is done. It just means that it's on pause until they turn the factories back on. So let's talk about a few names. Hess, HES, Marathon Oil, MRO, Oxy, Williams, WMB, Of course, you have the XLE. Keep watching these stocks, guys. They are strong. They're being bought. And these are names that, again, I have them on my watch list. Okay. These are names that I am looking to trade. That's why I am sharing them with you. This week is going to be another busy week, guys. It's going to be busy for energy related stocks. A lot of these stocks are looking to move higher this week. Okay. So as we kick off the week, I want you guys again to keep all this in mind and don't be fooled. Okay. Don't buy what they're selling on the news. Okay. There are some serious problems right now. And until we see the market get back into trend, let's not pick a side just yet. Okay. This is a very quick and very fluctuating market. Okay. You don't want to make any serious commitments right now. Be in stocks when they're getting bought up and be out once they're starting to sell off. You got to flow with the volatility. And again, if you're not shorting, you're basically, fighting with one hand tied behind your back. Okay. You're punching with one arm, ready to hit, and the other arm is tied behind your back. Okay. Not very effective. Okay. Shorting is also how you defend a portfolio, guys. Okay. Yes, you can be in the sidelines, but if you don't know how to capitalize on the sell-offs, you're basically limiting yourself to making money 1/3 of the time. But markets don't just move up. I know that's what Wall Street always says. The markets always go higher. Okay. But that's because they don't want you to know how to short. Okay. So, all right, guys, that's what's looking good this week. That's what I'm looking at. Be on the lookout for Cisco. That's the other one. I don't want to forget about that. CSCO, Cisco. This could be a good short play. So definitely put this on your radar. We could see some heavy selling in Cisco, and it's right there at the lows. Okay, so if it breaks, it could be a good swing short, for a few points until the sell-off is over. But guys, these tech stocks are getting hammered, and every day they're looking worse and worse. Microsoft, Apple, guys, Apple is finally starting to break down, which pretty much was the strongest of the bunch. This was the only one that refused to go down. Well, now it's starting to get going. Okay. Apple is another one that we want to watch. We really want to see how far and how strong the sellers can take this thing. Okay. Now you want to watch Apple because that is what's going to show us how strong the sellers are in these markets. Okay. We're going to see their strength. Okay. We're going to see their strength in the Apple versus the sellers fight. Okay. If you're long, be ready for a ride. Okay. You could have a potential sell-off, but personally, I'm looking short in tech. Okay. Anything that's tech related, I'm looking at on the short side. Okay. Not looking to go long right now. Another one is Nvidia. Nvidia looks like, Nvidia has been getting heavily sold off. It looks like it wants to see lower numbers. Okay. This week looks like we could get a good setup, maybe for shorting Nvidia. Okay. That's what I'm looking at. These are all swing trades, by the way, guys. Okay. Maybe a few days at most. Okay. You don't really know with these markets. So, look, don't be fooled. The talking heads are telling everyone that, this is all bubblegum and candy and the market's back and everybody needs to get in. But the market is not in good shape. You got record inflation. You got record debt. You have inverse yields happening. I mean, again, this is not all bubblegum and candy, guys. No matter what they say, if the market is going to get back to moving up, you're going to have to see tech move up. Not just one or two companies, but you're going to need to see the strength of the entire board, the breadth of the market, okay? You're going to need to see the banks get back into the uptrends. You're going to need to see housing stocks get back into uptrends and rates back to zero. That's what they need to do to get the market actually back up. And if they can actually prop up the market like that, then the price of gas will go through the roof, higher than we've ever seen. Mortgage rates will be up towards 7%, maybe more. Okay. The price will basically be Main Street paying through the nose for goods. That's the only way that Wall Street is going to get going. If Main Street picks up the tab, okay? And it's possible that this could happen. We could see the market get pushed to these highs, take off, and again, Main Street will basically be paying the ticket. Okay. So look, I started off this video talking about how we're in a stage 3 cycle. Okay. We're in a topping cycle right now. And one of two things is going to happen here. Either the market is going to get back up and get back into that advancing cycle, or it's going to break down and we're going to get declining prices. Okay. No one really knows where it will go right now. All we can do is watch and observe and see what the market is telling us, see where the strength is, see where the weakness is. And that's all we can do, guys. So until the next video, be careful, watch the stocks that I mentioned, put them on your watch list. And on the next video, we'll talk about how things have been going and, what's looking good at that point.